Good afternoon. Thanks for joining us. It was a pleasure to be here and following John, who I've shared a career with. We both are CEOs in the uranium industry living in Casper, Wyoming. Probably the two folks who can claim to be CEOs of publicly traded companies in Casper, Wyoming. So you have us here in Toronto today. But appreciate the opportunity to talk about Peninsula Energy. Peninsula is an Australian-listed uranium development and production company with our flagship assets in the state of Wyoming as well. And I share with you the disclaimers. I'd ask that you go to our website and review this, the disclaimers of our presentation. I apologize today. I didn't have a chance to cut down my deck. I have about 35 slides, and I'm not going to talk about all of them, even though I'm very capable of doing that. Today, what I want you to know about Peninsula Energy, and I'm just going to bring out the highlights of this presentation today. We have a world-class asset with our Lance facilities in the state of Wyoming. It is really one of the largest uranium resources projects under development, and we have a tremendous upside. We are a near-term producer. We anticipate putting the project back into production late in 2024. We're taking the steps today and making the investment now to make that happen. We have multiple avenues of growth for our company. The resource potential at Lance is tremendous. We can grow it through additional drilling. And we've also just established a project we call the Dagger Project. It's complementary to Lance. It's about 20 kilometers to the northeast of the Lance project. And that's an opportunity for growth that I'm going to spend a few minutes on today because I think that's a really important new development for our company. Of course, we're enjoying the favorable economics of uranium and the uranium markets in the United States. John did a really nice job with that. I'm going to skip that today. And I'm going to talk to you a little bit about our funding needs and our funding solutions that we propose. Because we are a development company, we're getting a project and a plant expansion effort underway. And we do have very publicly stated that there's some need to fund additional development or activities at our project. First and foremost, one of the characteristics about Peninsula is it's staffed and manned by a very competent and capable production team. We put this project into production back in 2015. During the downturn in the uranium markets, we retained our employees. We didn't let anybody go. In fact, what we did was create incentive programs for them to stay. Today, the group of key management people have over 200 years of direct uranium production operations experience. This is a very capable uranium development and operational team. Our company is trading at a bit of a discount to the space because of some of the headwinds that we faced during the course of 2023. We have an Australian dollar market cap of about $163 million. You'll see in July that our share price dropped. It was on some very difficult news. We hadn't intended to put the project into production, frankly, this year, in the middle of this year, but we came across a very strong headwind, became a storm, and we were unable to put our project into production this year. So we pressed reset. We developed a new life of mine plan. That life of mine plan, that new plan, is going to give us a stronger and better outlook for the future. And we're looking forward, not looking back. We're looking forward to being a very strong and capable producer in the coming years. I'll tell you about that. Of course, we have a sustainability focus that's very important to utility customers around the globe. We check the boxes on sustainability, but we do a little more than that. We really care about sustainability and making sure that our mining project is environmentally friendly and fully in compliance with the United States and the state of Wyoming rules and regulations, which are some of the most protective environmental rules and regulations around the globe. Like I said, I'm going to skip the uranium market overview. The uranium market is good. Any questions? Okay, good. You're here because you know that, and I don't have to tell you that. Great. I'm going to back up and just tell you one thing about uranium. This is about Peninsula, and this is dispelling myths. Yes, we have contracts in place. We have long-term contracts in place, and we've had them in place for really over 8 years now. Our contract book extends out until the year 2033, and we're selling about 5 million pounds of uranium into contracts that have price structures that have fixed and base price escalated structures, but also market exposure in our contract portfolio. The remaining 2/3 of our production, so that represents about 1/3 of our planned future production. The remaining 2/3 of our production is open to marketing and sales in the spot market or into future contracts that we sign. What we've done is design this chart so that you can understand that against the spot market, as it goes up, our contract book has escalating expected revenues, and we have very good leverage to the upside of uranium. But at the same time, if the price of uranium were to go down, and none of us in this room expect that to happen, right? But if it was to go down, our contract book protects us against low prices, and we actually realize a higher price from uranium in the lower markets than the spot market. So having a good contract portfolio like we do is a strength for a company. And I want to share with you, that we have great relationships with our customers. They've been working with us as we adjusted our mine production plan. And we've already come to agreements with our customers so that the 2023 and 2024 deliveries that we were planning to have will be deferred into a future time frame without penalty to the company. So we're very excited about our relationships with our customers, the strength of our contract book. That's one of the things that I want people to understand is contract books can be very good and healthy for a producing company. The Lance Project is located in the state of Wyoming, and as John mentioned, the state of Wyoming is home to a lot of uranium producers. That's why we ended up living there, is because we've made our careers in uranium production. It's a Tier 1 jurisdiction, no doubt about it. The state of Wyoming is a great place to do business as a mining company and as a uranium producer. Our Lance projects, this is a slide I want you to understand. We've subdivided our district scale Lance projects, which is 37 kilometers north to south and 8 kilometers wide. We've subdivided that into 3 areas: the Ross area, which is fully licensed for production; the Kendrick area, which is our development project. It surrounds and sequentially is the next area that we'll produce out of after Ross is exhausted. The Kendrick area, we have a license application in with the state of Wyoming. It's been in for the last 9, almost 10 months now. It's about an 18-month process to have a license area amended in the state of Wyoming. We're about halfway through that process. We expect by mid-year next year we'll have a license amendment so that Kendrick can be a part of our production licenses. And that'll be long before we actually need to start mining. In fact, I just told you earlier, we won't start mining at Ross again or resume mining at Ross until late in 2024. By then, we'll probably have the Kendrick amendments complete. And then we have the Barber exploration area. Barber is the area in green on this map. It represents an area that contains about 30 million pounds of inferred resources. We don't include the 30 million pounds of inferred resources at Barber in our project economics. When I'm presenting you project economics in the next couple of minutes, you're going to see that's only the economics on production from the Ross and the Kendrick areas. So 2/3 of our resource is excluded from our economics. But it represents a great potential for us in the future. In fact, because additional closer space drilling and exploration and delineation drilling generally leads to an expansion of our resources, the exploration target that we can talk about for the Lance projects is 100 to 160 million additional pounds. We have a 54 million pound project. It could be a 100, 150, maybe even a 200 million pound project with future drilling. That's a very significant project that can be developed within the mineral rights that we hold today and just by doing additional drilling. So it's a very exciting aspect of our company. The timeline for us to go into production, as I told you, our ambition now is to have our project up and producing in late 2024, early 2025. We have full licenses. We've produced in the past. We have about an 800,000 pound per year satellite production facility, which means at our facility we can generate uranium-loaded ion exchange resins. We're relying on a third party to process those resins and that uranium into yellow cake. That third party backed out of that agreement in the middle of this year, and that's what was the headwind that became a storm for us, and created a disruption in our business plan. We've overcome that business plan by determining that it would be best for us to become a fully independent end-to-end uranium producer, and our expectation is that we can expand our plant and build that back-end circuit into our plant facilities before the end of next year. So we're hard at it right now. Our production profile, this is a brand new mining plan, but we expect that in 2025 we'll be able to produce around 1.1 million pounds per year from the Ross facilities, and we'll grow that before the end of the decade up to about 1.8 million pounds per year. So what this represents is about a 10-year mine life, producing 15 million pounds from the Ross and the Kendrick areas of Lance. Construction is in process now. We've hired an engineering firm. We're getting everything ready to build. We've ordered building materials. We have electrical facilities in place. Those are some of the longest lead time items that our industry faces now. But when the plant was built originally, the expansion was anticipated. It was licensed, and they put the electrical facilities in for the expanded facilities, and that's a blessing today to have those electrical facilities in place at our plant and not being reliant on getting them from the markets. We're also continuing to drill and develop new resources. Our mine unit 3 will be ready for us to produce out of when we start production at the end of next year. Our capital requirements was always the next big question. Now that we've changed our business plan, how much do we need? We've presented the case, and it's very, open disclosures here. We think we're going to need about $53 million of expenditure into the project before we get to first production. And then we think it's going to take another $17, $18 million of working capital to get from first production at the end of next year to the point where we're sustainably cash flow positive, profitable, and we project that date to be August to September of 2025. So our business plan is a very strong one, robust one. Our unit costs, very competitive. We think our direct operating costs will be around $21 a pound. Our all-in sustaining costs will be about $42 a pound. We do have a little heavier royalty and tax burden. We think about $7.50 a pound out of that goes to taxes and royalties. That's just one of the natures of doing business in the United States and in the state of Wyoming. I want to move ahead to talk about our Dagger project. I don't want to miss that opportunity. Dagger was a new announcement in the month of October. We added new mineral rights to the northeast of the Lance projects. It's only about 20 kilometers from the Ross production facilities to the Dagger project. We did this with an organic in-house effort. We actually have been working on this for the last 5 years. We've built a mineral rights portfolio of federal mineral claims, state leases, and private mineral leases. And we actually consolidated this land package into what we call Dagger today. We've announced an initial mineral endowment or resource estimate of 7 million pounds. And what's really exciting is we built the 7 million pound project for a cost of about $800,000. If you know what uranium resources in the ground are valued at in companies, $2 a pound is a small number. We did this for 12 cents a pound. This is the kind of nature of the people that we have working at Peninsula Energy. We see opportunity, we chase it. The question is, are there unknown or undeveloped or uncontrolled uranium projects in the state of Wyoming or in the United States? The answer is yes, and we just brought one to the table. 7 million pounds of uranium resources at a cost of 12 cents a pound. We recognize that we need some money. We have about $12 million in the bank today. We had identified a $90 million, $95 million funding requirement. And so we're laser focused on a funding solution. We're looking at debt and equity opportunities. The uranium market is very strong today. We're pleased with that. It's very supportive, and we're very confident that we're going to bring a very good funding solution to our company to meet the funding requirements and make sure that we can execute this robust business plan. So in conclusion, we have a flagship project in the state of Wyoming. It's a long life project. It's a very important uranium asset in the United States. We expect to start producing in 2024. Once in production, we'll be an independent, low-cost, end-to-end producer of final product dry yellow cake. We have a talented and experienced team that's behind all of this, and we're focused on long-term sustainability and well-positioned to grow our market and to grow in the United States. So thank you for that. And Dave, I made it through 35 slides in 20 minutes. That's a record.
Impressive.